Hey stock market family, I'm here in the Ariel BVI for only one more day, and I want to make you this video and update on the FRC stock situation, aka First Republic debacle. Let's hop into some charts, let's pull up some company news and some media. I'll give you my thoughts and opinions on what's going on, and I'll sort everything out in this video for you right now. All right, everyone, here is the update on First Republic Bank. This news is brand new, so we're talking just a few hours ago. And to really break it all down for you, I'll include this in the description box below just in case you want to read it yourself. But long story short, it sounds like JP Morgan's doing it, but that's not really the case. If we scroll down, what really is happening is the FDIC estimated in a statement that the cost of the deposit insurance fund is going to be about $13 billion. The California Department of Financial Protection and Innovation said it had taken possession of First Republic, and the FDIC would act as its receiver. So this is really what's happening, and JP Morgan's just going to be buying it from the FDIC. So not that really fully matters, but just kind of like a quick FYI, meaning they pretty much made them, right? The FDIC and the institutions are making JP Morgan buy this. Now, that being the case, JP Morgan is up pretty stoutly right now, pre-market. So the market hasn't opened yet. We've come out in about 30 minutes. And FRC, First Republic Bank, is halted. So what's unique here is that it's really valuing all of its assets at about $10.6 billion, and that's what JP Morgan is paying to the FDIC for most of the assets of the San Francisco-based bank, whose failure is the largest since Washington Mutual in 2008. So this is a big deal, by the way. Let's just not sweep this under the rug. I mean, this is a huge, huge bank that is getting bought out, getting acquired, essentially. So what does it mean to us, the shareholders? Because you all know I played this position knowing that it could go to zero, having that as the ultimate risk, and that's pretty much what's happening, more or less. Right now, the shares are halted, and they are down 43% pre-market, 34% pre-market, so it's about $2.30 right now, but it is halted as of now. And it'll probably stay halted for a while, if I had to guess. But what's going to occur at this price and at this juncture is they really need to determine what is the share value of First Republic Bank based on some of these assets. So $10.6 billion. So now when you're talking about assets, that's all things, right? When you are acquiring a stock that is publicly traded, you have to acquire its shares. That's how you get ownership of whatever is public. So that $10.6 billion is going to have to factor in the share price along with other assets, all the other assets that it might have, which First Republic just received all of its assets from, all of Silicon Valley's deposits and things of that nature. So this is a pretty large and pretty robust article, and it's talking about what JP Morgan's doing as well. So JP Morgan's also repaying $25 billion of the $30 billion big bank deposits that First Republic received really just weeks ago. That's when I came up with the original video. Now, that being the case, just to keep in mind really quickly, here right before earnings on First Republic Bank, depending of course on how you played this position and at what price you got in and where you bought your shares and all those fun things, on this day before earnings, we did have numerous strong up days in a row. So if you bought some at 1262 here and you had numerous good up days in a row, on this day you are and were able to get into a profitable collar strategy over earnings. I'm not saying you did or that you should have. Well, I am saying you should have if you didn't. So again, a collar is selling calls and buying puts. So I am going to lose on First Republic Bank, and it's going to be a meaningful loss. I'm not saying meaningful. It's going to be about 10 Rs or so, because I was putting some money on this one just to see what it would do. But this would have been a much larger loss had I not sold some calls and bought some puts on the 24th of April. After you had a really, really strong up day, right? Buying those puts, selling those calls, acting as and creating an insurance position. Keeping in mind, boys and girls, ladies and gentlemen, that I definitely do teach this strategy for free, and I also teach it on our website in more depth at the Hedging with Options program. Long story short, it gives you the opportunity to protect your downside. It gives you the opportunity to mitigate your risk quite substantially, and depending on where you bought those puts. Mine was the $10 strike price. This is at least protecting some of the downside position on First Republic Bank. So that being the case and that being stated, I'm still going to lose on First Republic Bank. I'm going to take a loss on this one for sure, realized. The biggest question is, what value are they going to have on the actual shares as part of this $10 billion asset acquisition? That's going to be the really, really big question that we have. And my assumption is it'll be somewhere between $2 and $5. Most likely. That's probably going to be the case. The stock likely gets halted until they figure that out. If they do unhalt it, which is perfectly reasonable, it'll probably just hover for a while, stay flat for a while, and people will slowly buy it up, most likely. I do not believe that JP Morgan is going to settle all of these accounts today or tomorrow. So we're going to get some more information over the next few hours and 2 or 3 or 4 days. But the big news on JP Morgan is that it's now even larger. This bank has become even more robust. And this was a really, really good interaction with that 200 simple on the weekly chart. So from a technical analysis standpoint, JP Morgan was also a really interesting and unique buying opportunity with this hammer, this one white soldier back here. And in the original video, me talking about the banking situation, First Republic wasn't the only stock that I purchased, and it wasn't the only stock mentioned in that video as well. I do have Bank of Montreal, which I did not fill all 4 of my pyramid levels, but I do have one partial here at 85.29. So that piece is slowly going higher. And then Schwab, right, also was mentioned, and Schwab also got filled at 48.87 back here in early April, up on that one just a small amount. There are other smaller banks as well out there, and these banks are the First Horizon. I talked a little bit about, posted a video not too long ago on First Horizon. So this is the bank that I bank with actually in Nashville. Then you have Pinnacle Financial Services. So Pinnacle, another regional bank that's going to be down a little bit on this news, but most likely will slowly kind of recover back out of here. Long story short, team, this is a big deal. And yes, it is all about your risk. That's the key, is on any particular trade, regardless of how much we're going to learn or how much we're going to lose or how much you're going to make. If you're shorting it, of course, you're making some money. But if you are losing on First Horizon, as am I, the lessons are simply how much is your risk? How much are you comfortable risking? How do you protect your downside? These are all very, very valuable pieces of intel to learn. Because at some point, if you swing a big enough hammer and you position your risk well, you can do extremely well in trading, obviously. It's all about risk control. It's a lot easier to risk money that you have to lose than you do not have to lose. That's obviously the case. So when you're taking bets, when you're taking trades like the one on First Republic, especially anytime you're approaching into earnings, you always want to position yourself with some protection if you can, especially on up days, right? Big update comes in, sell some calls, buy some puts, create some protection just in case. Because from a technical standpoint, this was still an absolute thing of beauty. There was a lot of chances, choices, and opportunities to make money on the downside here with this really, really perfect bearish gap and go. So you had some really, really strong bulls trapped right here. You had a month of consolidation. Earnings came out. The news also came out that $100 billion of deposits had been withdrawn from First Republic, so that's the individual people taking money out of the bank. That news came out later in the day on that day, and that's when the stock really, really started rocking. So if you had bought puts on this day, whatever type of put that you purchased, those are up pretty substantially. So all those things being said, at this stage, JP Morgan looks like it's going to be getting larger, and it's going to be acquiring this bank from the FDIC, essentially, which is going to be taking over. Again, I believe that First Republic will stay halted most of the day. I'd be surprised if they do unhalt it. And if they do unhalt it, I don't think it's going to be too dramatic. I think it might pop down to $1, maybe $1.86, and then slowly meander its way back up to $2 or $3, because they really do have to figure out the actual assets for the overall company. Assets, of course, being their stock and their share price, along with physical buildings, intellectual property, loans, deposits, all kinds of things. So they got to figure all that out, and that's going to be happening this week as the government ensured and made sure that JP Morgan came in, stepped up, and saved yet another bank, the biggest banking failure since 2008. And the broader markets are still pretty strong. Very fascinating, in my opinion, how strong the broader markets are with the whole banking situation going on. This is the financial ETF. This is actually a 3X ETF, and I've played this one a lot. And what we'll notice is this particular ETF is still holding out pretty strong. So some support, some support, some support. Here's the monthly chart of the FAS, and this is at, as of right now, the 100 simple moving average on a monthly time frame. So the reason I'm bringing that up, overall markets are still quite strong. This individual bank failing doesn't appear like it's affecting a whole lot right now. The overall trend still looks to me like we're going to be continuing to go up. This is the QQQs. Here's the weekly time frame. And the weekly time frame, we have the 100 simple that could act as a little bit of a target or a little bit of a resistance. We're probably going to hit that pretty soon. And as far as broader market stocks, go make your money back on some bigger names, some larger companies. Ladies and gentlemen, take it slow. If you lost money, and again, I mentioned I'm going to lose about 10 Rs depending on exactly what share price ends up being the final price for the takeover. But the goal is for me not to make it back in a day, definitely not going to make it back in an hour, probably going to make it back over 2 or 3 months. Regardless of how much you lost or regardless of how many R's you're down, the number one thing to keep in mind on a debacle or a losing trade or losing investment, similar to FRC, do not try to do all of it back very, very quickly. It takes, in my personal opinion, 6 to 7 times longer to make back losses than it required to lose it. So in this particular trade, this was about over a month for myself and for a lot of other investors. So if you lose that amount of money in a month, it's going to take at least 6 or 7 months, not to make it and then some, but just to make it back, just to get back to break even. So put your head down, get some studying in, figure out the next opportunity, because there's always opportunities with every failure, with every lesson, with every shift and change in the marketplace. There will always come a greater seed of opportunity. We just got to go plant some seeds. We got to go track it down. We got to go find it and take advantage of that opportunity. In fact, right now, our boy Tony is posting a really, really great trade setup in our Slack channel, saying that this is a once-in-a-decade trade setup. Let's do it together. So for those of you who are in Slack, it's going to be really, really cool to check out that particular trade, right? There's always opportunities that are available. Speaking of opportunities, I will also include this link just in case. One of the ways that am extremely confident each person listening to this video can make some additional income is to create a sale opportunity in your life. My book with Les Brown just launched. I'll include the link to this book in the description below, which I'm extremely excited about. The book is called Your Story Sells: How to Leverage Transparency, Authenticity, and Growth to Succeed in Business. Long story short, that's exactly what I'm doing in this video, team. I'm being transparent. I'm letting you know that I lost money on FRC. I'm being authentic and telling you exactly how much money I lost, which is about $50,000 or 10 Rs. My goal is to help anyone all the time understand the math of trading, the math of investing, realizing it's a long-term game, realizing that when you lose, it's just the process of how everything works. Know your risk on any investment, know your math, and as you know that, as you build out the time horizon, as you build out the understanding, you can absolutely and easily conquer any investment asset class, knowing your risk, your downside, and your upside. Ladies and gentlemen, thanks so much for tuning into this video. I hope you found it helpful and beneficial. And until next time, love life, live life, and trade it. Bye.